Hello, welcome to another great webinar here from Advanta IRA, where we're going to talk today, presumably and most prominently, about talking about raising capital from self-directed IRAs and 401ks. So a lot of the presentations we do focus on certain types of investments, whether it's real estate, private loans, maybe the checkbook LLC, but we're going to switch gears a little bit today and talk about really how you can raise capital from a self-directed account and basically other types of retirement accounts. If you're somebody out there who is looking for outside money or looking for someone to help fund your next deal, or maybe you are raising a couple $1 million in capital for an upcoming hedge fund or syndication, and really talk about self-directed from that perspective. My name is Scott Maurer. I'm the Vice President of Sales here at Advanta IRA. I've been with the company since 2006. I've done a lot of different things during my time at Advanta IRA. I'm a licensed attorney by degree. But my contact information is here on this slide. I'm joined today by my colleague, Larissa Greene, who has also been with Advanta for quite a while and has done a lot of educational webinars. I'll let her introduce herself.
Yeah, thank you so much, Scott. Thank you so much, everyone, for joining us. I'm excited about this topic today. As Scott mentioned, we're kind of going to go through what raising capital with IRAs looks like. And it's really sort of the flip side of investing, because a lot of times we're talking about what you can do with your IRA, and we give examples of how that's worked out for different investment structures. And I can really only think of one example in a case study that we talk about where we say, hey, and the other person on the other side of this transaction benefited from this as well. So we're really going to be focusing on that today. I've been with Advanta since 2011, and I've kind of done a little bit of everything with Advanta leading up to working in business development with Scott. So we do a lot of education, networking, and business development. My contact information is here in case you have any specific questions.
Yeah, thanks, Larissa. I look forward to doing this webinar today with you. And if you're listening live to this webinar today, there's a question box on the GoToWebinar control panel. You can type your question simply into that question box, and we'll make sure we get to it during the course of the presentation today. If you are somebody who is listening to the recorded version, we do record all our webinars for later playback, and those links are placed on our YouTube page. If you're listening to the recorded version, jot down Larissa's number and email, or jot down my number and email, and you can reach out to us afterwards with any questions that you have. Now, just a little bit about Advanta IRA. We've been around for over 20 years. The only thing that we do at Advanta is the administration of self-directed retirement accounts, whether IRAs, Roth IRAs, 401ks. We currently have over $3 billion in assets under management, over 13,000 active accounts and clients that we have. We really, and this is important from the context of raising capital, one of the key things we're really committed to is customer service experience. And it's not just a customer service for people who have IRAs and are using our services for their own account, but it's also the customer service and the level of dedication we give to our referral partners as well. So people who are raising capital and who may have, a number of people using their IRA accounts through Advanta, we will make sure to place all of those accounts with one account manager. Really give you one point of contact, both in setting up the accounts and referring your clients over, and also then processing the investment. So it's something we're dedicated to at Advanta, really to give that concierge level of service, both to the client and also to the referral partner. Now, for those of you who are looking to raise capital, wondering really what a self-directed IRA is in the first place, it's a retirement account that gives the account owner the flexibility to invest in whatever assets are permissible under IRS guidelines. They're not being kind of pushed into certain mutual funds or certain stocks, or being limited to publicly traded assets. So the assets that are held within self-directed IRAs typically are going to be outside of the stock market. And it's things that people a lot of times maybe understand and want to invest in. If they're a real estate investor, they may more intrinsically understand investing in a property or investing in a hedge fund that is invested in real estate and things of that nature. So that's really what a self-directed IRA account and a retirement account gives someone, is the ability to invest in things that are outside of more conventional assets. So they're able to drive better returns, again, maybe feel more comfortable about the investment. Certainly with the stock market uncertainty, some years are good, some years are bad, sometimes years are both good and bad, and people are looking for more solid, tangible investments to make as part of their portfolio. and really choose to self-direct. For people that have come to us over the years, I think Larissa would attest to this too, usually are coming for one of three reasons, or maybe multiple reasons here on this screen. I mentioned already the stock market fatigue. Individuals who see the markets going up and down, it makes them uncomfortable that their nest egg, that their 401k, that their IRA that they're counting on for retirement is tied up in a market that can be unstable at times, or is full of investments that they don't understand. And it makes them uncomfortable that a geopolitical event taking place halfway around the world has an impact on their retirement portfolio. So they're looking for something that's more tangible to invest in. For some clients, it's the tax benefit. The income that is generated, the profits from these investments come back to the IRA, either tax deferred or tax free, depending on the type of IRA someone has. So if you're looking to make, someone's looking at an investment opportunity with a substantial rate of return, or the potential for a substantial rate of return, they would rather realize those gains inside of their tax deferred universe of their IRA account, rather than having that income show up on their personal tax return. So it's a tax shelter for individuals for certain types of investments. But for a lot of folks, the IRA, the self-directed account, really is just a new source of capital to make an investment. Why this is so important when we talk about capital raising is that individuals, you may be presenting an investment opportunity to someone. Hey, I'm looking to raise $25,000 or $50,000 or $100,000 from individuals to invest, and they may see a great opportunity of something they could participate in, but they don't know where to get that money from. And so maybe they don't have it in their personal savings account, so they're looking for ways to not miss out on the opportunity, but also maybe not touch personal funds. And the IRA, the old 401k, gives them a lot of funds. It gives them the availability of those funds to use in that investment. So I think for the capital raiser, it's another tool in your tool belt when you're talking to investors as, hey, here's a number of ways you can invest with us. And did you know you have that old 401k, that old 403b account to basically use for this upcoming investment? And most people, again, don't know this is even possible because their IRA, their 401k accounts are held with banks and brokerage firms that offer them limited investment products. The brokerage firms like Fidelity and Schwab, great companies if you're holding those types of assets. But if you're looking to invest in a hedge fund, in a startup company, loan money on a piece of real estate, you can't do it through their platform. And they simply don't allow you to do it. That's their choice. Every custodian is allowed to decide what assets they will hold. That's why our company exists, to hold really these alternative assets as part of its platform, and what will allow account holders to invest in assets that they choose. So the banks and brokerage firms are simply not allowing their clients to make the investments because it doesn't fit their business model, and they're certainly not going to let you know that you have other options out there. So that's why most people, when you talk to them, if you're just sitting down at their kitchen table, meeting at a coffee shop, talking about your investment opportunity and their ability to use their IRA or 401k, they may ask you, hey, why haven't I heard about this before? I didn't know that I could use my IRA or 401k to make this type of an investment, and this is the reason why. With that, I'll let Larissa take it from here.
Yeah, and I also just want to note too that IRAs, retirement accounts, tend to be the most liquid asset we hold. And so when you think about getting involved in other types of investments, consider that it's very simple to reach out to your brokerage and liquidate a certain amount of stock in order to raise the capital or raise the cash in your retirement account to make a new investment. So if I was offered the opportunity to invest in a limited partnership, for example, it would be easy enough for me to call my brokerage firm and say, I want to liquidate $50,000 in assets so that I can move it to an alternative investment strategy. And that's really easy. But when you think about our personal assets, it's typically not going to be as easy to liquidate those assets, or you may not be able to. And so when you're looking at raising capital, just understanding very simply that retirement funds tend to be very liquid or easily liquidated, I think that's a huge benefit. Alternative investment options, there is such a large range of investments that we see at Advanta, and this is really not the definitive list, but we like to give an idea of different asset classes and investments that we see at Advanta to kind of get everybody thinking about different structures that might work either in raising capital or making investments. There's really only two asset classes you can't hold in an IRA, and that's life insurance and collectibles. And so then outside of that, the sky is just about the limit. Of course, we see a lot of real estate investments at Advanta IRA. Real estate tends to be probably one of the most common structures or investments, asset classes that we see at Advanta, whether it's people purchasing and holding, so buying and holding single family homes and condos, duplexes, any type of long-term rental, but of course we do see short-term rentals. We've had people rehab properties, whether it's to fix and flip or buy and hold. The strategy is completely up to the account holder. We don't advise. So a client can come over and say, well, I'm buying a piece of land. It's not going to earn any income. I'm going to hold that property until the values in that area go up, and then I'm going to sell it. And who knows, tomorrow somebody might make an offer, a developer might come along and make an offer on that piece of property, and the account holder is able to make that decision, say, okay, I want to hold it a little longer, or I'm ready to take this offer, and it could have been in their IRA account a week, a day, a month, a year, 10 years, and that strategy is their own. We do see commercial real estate. A lot of times it's going to be in the form of a syndication, but we do have people that hold commercial property directly in their IRA. But of course, raising capital, putting investors together, either subscribing to an LLC or as a limited partnership, so that they can invest in multifamily and retail centers. We do see a lot of private equity for hedge funds and private stock and startup companies, convertible notes. There are just so many ways to raise capital. And then, of course, another very common structure we see, private lending. It could be tied to a mortgage or deed of trust, but it could also be unsecured. And I think a lot of times people are surprised to hear that I'm pretty sure unsecured notes we hold a lot more unsecured notes at Advanta than we do a mortgage or deed of trust, and that's typically because it is to a business rather than to an individual, and sometimes they're convertible. So instead of the note being paid back, it's converted to stock in the company. But then, of course, notes collateralized by things that are considered non-real estate assets. So we do like to go over the different types of IRA accounts that we can hold on your behalf. And I think for whatever reason, I don't know if you encounter this a lot, Scott, but a lot of times people think it has to be a Roth IRA to self-direct it. Have you heard that before?
I have, yeah, and it's absolutely, it really is. You can see on this slide, any type of IRA, and I think you'll talk in more detail about the former employer plans also, which is a huge, huge source of capital that people have that they don't realize they can use.
Yep, and I'm not really sure where the Roth IRA information comes from, but like Scott said, if it ends in IRA, it can be self-directed. I think traditional IRAs are more common, like Scott said, because of rollovers from former employer plans. Typically, a former employer plan is a pre-tax account, not always, but typically, and it can go seamlessly into a traditional IRA. So we do hold a lot of traditional IRAs at Advanta, and sometimes people hear traditional and they think traditional assets, but what we're talking about here is actually the tax status of the retirement account, not the type of asset. So when we talk about self-direction, we're talking actually more specifically about the asset and not the type of account. And so a traditional IRA simply is a pre-tax account for an individual. Former employer plans that are pre-tax roll over seamlessly without penalty and without tax to a traditional IRA. You can, of course, establish a Roth IRA. And Scott made a few comments earlier, a couple slides ago, about the benefits or reasons people choose to self-direct, and that they're excited about having growth in the retirement account with an investment they have that they're expecting good returns on. And sometimes we'll even see people strategize, I have pre-tax money, but for this investment they feel it's going to be a windfall, for example, then they might convert it over to a Roth IRA. Because your strategy is your own, it's between you and your tax professional as to whether or not it makes sense for you to do so. But then, of course, growth in a Roth IRA would be tax-free. We can also hold employer-based IRAs, SEP IRAs, and simple IRAs, and those are for the self-employed, small businesses. You get employer contributions, and with a simple, you get employer and employee contributions. Many of these accounts can work together, so they're not you know set up one type of account, you're committed to that, and so you can have a SEP with a traditional IRA or Roth IRA. If you're eligible, you can have a health savings account. We also can hold education savings accounts, and then one that we see pretty commonly is a solo 401k. So if you're self-employed and you have no employees aside from yourself and your spouse, if you're a sole proprietor, independent business owner, you can have a solo 401k, and it has its own benefits beyond what other IRA accounts or traditional IRA accounts can offer you. So if you're self-employed, we do a webinar on SEP Simples and solo 401ks so that you can learn about the benefits and make a decision on what account might be best for you. And we do have that in our archives. So if you'd like to hear it, just send an email to myself or Scott, and we'll make sure to get that webinar over to you.
Great. Yeah, and one question just popped up. Thanks for the question that's coming in. And please, as individuals have more that come in, please don't hesitate to get those typed in. But someone asked what QRP stands for, and that's really just it's a qualified retirement plan. It's again solo. We call them solo 401ks, as Larissa was just describing them. Some people call them individual Ks, uni Ks, and some people call them QRPs. It really is just stands for qualified retirement plan, which a solo 401k is a type of qualified retirement plan. So you can have a solo, basically QRP or solo 401k plan. But great question, Larissa. I'll go to the next slide and let you continue. And again, anyone else, any other questions you have, please throw them out there.
So as I mentioned, with the old employer plans, it's easy to move money into an IRA in order to self-direct it, but you can also move IRA to IRA, and it's very easy. We're actually going to help you with that, so you really don't have to remember how it happens, but just note that, again, there's no tax and no penalty paid when you're moving between accounts. And there, of course, is a single exception to that if you're moving from a pre-tax account to a Roth IRA. But again, that's at your discretion. So aside from that, we're going to help you set up the right type of account. So if you reached out to us and said, I have an old employer plan, it's all pre-tax money, what type of account do I put it into and how do I get it over there so that I don't pay tax or penalty? Then we're going to help you with that. It'll be a traditional IRA. You'll move money by way of a direct rollover. We'll give you the information you'll need, and we'll give you the instructions on how to get that money moving. Whenever we submit a transfer request, IRA to IRA, we actually do that on your behalf. And so we're going to move like IRA to like IRA. We're going to send our transfer request with a letter of acceptance to your existing IRA. You're going to determine how much you're going to move. So whether that's a complete transfer or a partial, and you're giving us an amount to request, we can do that as well, because self-directed IRAs are not an all or nothing strategy. You can move over just the amount you need for the investment. And so when you're raising capital and you're talking to people about investing with you, let's say you have a minimum of 50,000 and you have somebody that says, well, what is your minimum? You know, that's really what I'm looking at. Then they can move over just the amount they want to invest. So they can move over 50,000 and they can be 100% invested. So they don't have to leave any cash in the account at all. And so for them, you know, this is truly diversifying, and it's a great strategy when you're talking to somebody and they say, well, I don't want to move all my money into this account. How does that work? They do not have to move it all. There are a lot of investment structures for raising capital. We talked a little bit about that at the beginning of the webinar, but we do see a lot of syndication. So basically pooling money together to make an investment into multifamily real estate or maybe mobile home parks. And so you have a lot of passive investors, and we have a slide coming up. We're going to talk a little more about, passive investors versus people who are more actively investing. But a lot of times when you're raising capital, you're going to meet people who are looking to be more on the passive side. They could certainly invest it themselves, but they would rather not have to do all of the legwork that you're going to be doing as the capital raiser. And so you'll see that in the form of a syndication a lot, and hedge funds for other purposes. So we talk a lot about real estate, but we also see people raising capital for things like bridge loans and business startups, or sometimes you call that like angel investing. We have seen people raising capital into a fund for helping businesses put another infusion of capital into their business for either growth or restructuring, whatever it might be. But we also have, different structures where there's a single individual bringing money to an investment in the form of a note or a loan. Maybe it's a mortgage or unsecured, as I mentioned earlier. We do see people investing in the form of a joint venture, so they're not just lending money, but they're also getting a portion of the upside or profits in the real estate venture or maybe business venture. And then we also do see private stock offerings. So we don't hold anything publicly traded, but you will see like local restaurants and breweries or maybe small local banks are private stock. And so we do have a number of individuals with private stock in some local companies. And then, there are some companies that offer stock to their employees. And once their employees retire, if that's considered private, they would roll over those funds or those stock certificates to their Advanta IRA.
Yep, that's good. And we had a question just come in too. Someone asked, I just opened my solo 401k, and they're asking, how do the new beneficial ownership reporting guidelines affect the raising of capital in my solo 401k? Do I have to report all the capital partners? So I think to answer that question, I'm not sure this will answer or not. If so, if not, please reach out to us afterwards. But if you are looking to raise capital within a 401k, I think you would want to probably be doing that by virtue of borrowing money from other people as opposed to adding them to your business and making them an additional partner, because that can affect your solo K, the fact now you're bringing in other partners into your business. You may have to, they may have to be offered part of the solo 401k or not. So I think if you're looking to raise capital within your solo 401k and get outside money in addition to the capital you have in there, would be either by having someone loan money to your 401k so that they're not affecting the beneficial ownership rules, or potentially doing it as more of a partnership with if they have outside capital and you have capital with your 401k, making an investment that way. So I hope that answered the question. If not, please reach out to either myself or Larissa afterwards. We'll make sure we get you a little more details on that. Another question came in. So I know that if you were a GP in a syndication, you cannot invest from your own self-directed IRA. What about a joint venture? Thank you for answering my questions. I don't know, Larissa, do you want to take that one about investing in a joint venture as opposed to being, having maybe your IRA invest as a GP in a syndicate when you're a GP in a syndication?
So we have seen people invest into a syndication that are a general partner of. However, it is a gray area and something we would strongly urge you to get a legal opinion on. It does depend on your percentage of ownership and sort of your control over that specific fund. And so there are a lot more things that go into that. With a joint venture, I think it depends, if this is a completely separate investment, so you're at arm's length from that joint venture, then we do see, that happen a lot of times where people lend money, they get a percentage of the upside, and, they're completely at an arm's length from any of the actual work that goes into that investment. And so, yes, that is definitely something you can do, again, at arm's length, but investing into a syndication where you're a general partner might be something you can do. But again, I'm cautious here to say, get a legal opinion, make sure that you have an attorney take a look at that, and make sure that it's not going to be violating IRS rules.
Yep, we had another question pop up that will hold talk to how do I get my business plan in front of IRA investors or solo 401k investors. We're going to talk about that at the very end of the webinar today, so stay tuned for that and how you could potentially get your deals in front of other individuals. But Larissa, I'll go to the next slide and let you continue.
So why are retirement funds a good source of capital? So we talked a little bit about this already, but I think a really great point is that they can be repeat investors for you, and years and years ago when we were talking to somebody raising capital. They were like, I want to do this with my own IRA, but how can I let people know that they can invest during this capital raise with IRA funds? So we put some information together for them. And what they found and what we saw was that many of their investors that were going to use personal money to invest didn't just use IRA money because they could, they did both. And so they had personal funds and IRA funds going into this capital raise. And I thought that was very interesting because instead of just taking advantage and saying, well, I don't want to use personal funds, they said, this is a great deal and I want to use personal funds and IRA funds so that my IRA can grow, with this investment as well. So I think that was a really great opportunity for the capital raiser, but also for their investors who, really believed in the product and wanted to be involved in the business as it was growing. Many people also just simply don't know that they can use IRA funds. They think that they're taking a distribution. I can't even tell you how many times people have said to me, but isn't this a distribution? Or how long before I have to put the money back? This is not a loan, it's an investment of the IRA. And so when we think about stocks, bonds, and mutual funds, those tend to be the most common investments we see and understand in our retirement account. But sort of going on behind the scenes in those for those investments would be titling. The assets are always titled in the name of the IRA. The purchases are made with IRA funds within an IRA account. And really, we don't even think about that, right? It's just so common for us to click a button, buy stock, let it sit there, have it grow with appreciation and also maybe dividends in that stock. When we don't want to have that stock anymore, we sell it. And all of this stuff is going on behind the scenes. It's all through the retirement account. Well, when you make an investment into a self-directed asset, the same thing is happening. You're not taking a distribution. This isn't personal income for you. It's all growth in the retirement account. So the purchase is made in the name of the IRA. It's done with IRA funds. And so when you access your Advanta IRA account, you're going to see that asset that you invested in listed in your statement. When there are dividends or income paid on that investment, it goes directly back to the IRA. And so when you're raising capital and you're looking at explaining to someone how this works, just very simply, it's an investment of the IRA. It's not a distribution. And I think people are just simply unaware that they have access to those funds without taking a distribution for investment purposes. And many times people are looking for alternatives. So again, raising capital, giving them the opportunity to truly diversify their portfolio, not an all or nothing strategy, moving over just what they want to invest with you, and then making that investment, holding that asset in a retirement account and having it grow tax deferred or tax free. And then of course, there's trillions of dollars in retirement plans, and most people don't know that they have access to that money. And so just literally letting them know about it might open up a whole new bucket for people to access to make those investments.
Yep. So we talk about kind of types of investors I think that are out there. I think as you're looking to raise capital, it's important sometimes to understand the mindset of those individuals. You have people who are active, people who maybe tend to invest in rentals and rehabs and wholesaling deals where they're in control, they're making decisions. It's a little more hands-on for them, and that's comfortable. They're comfortable with that. They actually want to be in those positions. And for those individuals, the downside is they end up spending more of their own time, their energy, their own expense, and ultimately they're responsible for details as well. Individuals, if they own a rental property through your IRA account and there's a leak in the middle of the night, they're going to call you as the landlord. Or they're going to call, maybe if you have a property management company, you can avoid that issue, but you're still responsible ultimately for that asset to produce and maintaining your rentals, setting the right market rent, et cetera. Obviously, rehabs involve a lot more work as well. And then on the flip side, you do have people who tend to who kind of gravitate to more passive investments, like private placements, syndications. They lend money from their IRAs where the time commitment really for those investments is up front in evaluating the opportunity, getting the initial paperwork done, and then really sitting back and letting other people take control. So the downside, I guess, in the sense of being a passive investor is that you don't have any control over the actual investments and no say in decisions, but a lot of people do understand that up front, and that's what can be intriguing about these types of passive investments. And these are the investments where we see people do or are raising capital from. As we go through some of the case studies that we're going to talk about here in just a minute. So I think talking to it might help you if you're raising capital to understand what type of individual that you're speaking with. Is it somebody who's going to be more active, and maybe your investment isn't going to be the best solution for them because they will be reaching out to you quite a bit, or wanting to be more involved in the ongoing activity, versus people who are maybe who have 9-to-5 jobs, and they don't have time to go out and find deals on their own, but they're certainly happy to put some of their funds towards investments with you. And I think the passive investors, for what we're talking about today, raising capital, typically can be a much bigger source of revenue, or obviously capital that you're looking for in these different investments. So we're going to pop through a couple of case studies here, and certainly, again, more questions, you have them, keep coming. Get them typed in the question box, and like I said, Larissa, I will get to them as we go through the rest of the webinar today. But the first case study is really on a smaller scale to an extent. We have Bill and Stephanie, so you only have two individuals. Bill is the real estate investor from the standpoint he bought the house to flip, but he needs extra cash to actually fund the rehab of the house itself. So he's able to get into the property. Maybe he had some of his own personal cash to actually buy it, but he's looking for outside financing. So this isn't a syndication model where he's raising millions of dollars and looking for several different investors. This is a one-off deal. So again, if you're raising capital, it could be for millions of dollar transaction, or it could be one-off real estate investments as well. So Bill known Stephanie for years. They grew up together. And he's explaining, here's the project that I recently got into. Here's what I'm looking for. Here's the capital. Here's the cash that I'm going to need to finish this project. And I'm willing to, pay a nice return to someone who has that capital. And in the course of their conversation, Bill explains that she's, to Stephanie, if you have an old 401k account and you're interested in this investment, that could be a way to fund this particular deal. It's up to Stephanie, and this is important for all of the case studies that we do, and certainly any transaction within an IRA, is that for Stephanie, this is her IRA account. She needs to make sure that she's doing her due diligence on, in this case, Bill, which obviously they've known each other for years, but she still may want to do a little bit more background digging on Bill. Also, certainly on the property that he's looking to flip. Bill says, hey, here's what I bought it for, here's what I hope to rehab it for and ultimately sell it for, and here's the profit. It's going to be up to Stephanie to do her own due diligence to make sure that she's comfortable with those numbers as well. And in this instance, she's willing to roll over $50,000 from her 401k and loan Bill those funds for the rehab. Now, when you're doing a private loan with your IRA account, the terms of that loan are between you and, in this case, your borrower. So Stephanie and Bill are going to get together and decide on the loan terms, what the interest rate's going to be. Will there be any kind of profit splitting from the investment when the property is sold? Is it what collateral will be put up for that $50,000 loan? And ultimately, it's up to the two of them to get that paperwork drafted. And it's important when you make any investment, or a client makes an investment through an IRA account, that the investment documents show the name of the IRA account as the actual investor. So whether it's a syndication, whether it's in this case a note and mortgage, you can see the wording there, Advanta IRA, for benefit of Stephanie S.'s IRA and her account number. That is our job at Advanta IRA, to make sure that wording appears on all of the documents. Make sure the client has reviewed and approved it as well. And we typically ask for those documents as soon as possible to make sure we can get the wording updated. But we usually need at least a day or two to make sure the documents are all correct. And also then in this case, send them to Stephanie to get her approval. And as far as the drafting of the documents, we don't draft the documents. We can't provide examples, but we do not require necessarily that it go through an attorney or some other legal source. If it's a document, if you're raising capital just by yourself and you have a joint venture agreement, or you have your own note and mortgage that you like to use, that will be sufficient for our purposes, as long as the IRA gets properly listed. So when it comes to all of our case studies here, if you're looking to raise capital, we're only looking at the documents you provide from a standpoint of making sure the IRA is listed as the actual subscriber. We don't have an approval process from a due diligence standpoint. For this particular investment, Stephanie agreed to loan Bill $50,000 at a 5% interest rate, but also she's going to get 25% of any profits made on the flipping of that house. So it's kind of a little bit of a joint venture type arrangement where her IRA can realize more than just the interest that would be charged on that loan. The loan is secured with a first mortgage. So if Bill were to not finish the project, skip town, something awful happens to Bill and he's not around anymore, Stephanie at least would have a mortgage on the property to secure her interest and be able to foreclose if needed. In this example, Bill's attorney did prepare the note and mortgage. The documents were all sent again to Stephanie to mark as read and approved. She looks over the note, looks over the mortgage, indicates her approval to Advanta, and from there, we will send the cash out of her IRA to Bill to finish the project. We hold on to the note and mortgage. Fast forwarding 6 months from now, when the project is complete, Bill's going to sell the property. He's going to make $40,000 in profit. So Stephanie is up to her. It's her account. It's her loan to figure out what that payoff amount is going to be that she sends over to the title company and attorney. And ultimately, those funds then are going to come back to her account, from that actual purchase. In this case, the principal comes back. She has her monthly payments of that 5% interest, and again, she got the $10,000 of profits back in her IRA. So $11,600 earnings on a $50,000 investment in 6 months, not bad for Stephanie in this situation. She's able to use her IRA to not miss out on that opportunity, and these earnings that she's getting back are not going to be included in her income. So if she was concerned about the tax situation of investing with Bill, she's negated that by simply making a loan from her IRA and letting those earnings accrue back into her account. From Bill's perspective, he still was able to make a net profit out of the deal, and again was able to access capital from somebody else's IRA account. So Bill could have been knocking on doors, talking to a lot of people looking for capital, but by mentioning the ability to use the 401k, allowed him to open up the door to Stephanie and to what she could invest. And for Stephanie's perspective, she found money that she didn't realize that she could use for this particular investment. Again, maybe she had $50,000 in a savings account, but didn't want to touch that money. That was for emergencies. These funds in the IRA were the perfect scenario for her to use for that loan.
Now we're going to talk about investing in multifamily syndications. And of course, this is a very common way to raise capital. And so you're typically going to see the more passive investors investing as a subscriber to an LLC or maybe as a limited partner. And that structure would be pretty typical. We're also going to talk a little bit about a tax that sometimes applies. So as we get started in this case study, we're going to talk about Nicole and Joe's deal. And again, this is a very typical way we see capital raising in an IRA. So Nicole is a multifamily syndicator and lined up her next apartment complex, and she needs to raise money for that purchase before closing. So Nicole works with an attorney to set up her syndication and to be able to take on investors at $50,000 increments. So remember, we talked about how when there is either a minimum or a certain amount being invested, it's not an all or nothing strategy. So Nicole can let her investors know that they can move over just the $50,000 they need in order to make that investment. Joe, as a real estate investor who wants to be, a passive investor truly, meets Nicole, and he would like to make an investment into her upcoming project. And again, he's going to do his due diligence on Nicole and the investment that she's proposing. He gets his IRA opened with Advanta and transfers the amount he wants to invest. So in this case, he decides he's going to invest $100,000 into Nicole's investment. So he'll work with Advanta to transfer those funds over. The process is really easy. It's just a matter of getting the account set up. We help request the funds, and then from there, Joe is going to work with his account manager for the investment paperwork. And when that paperwork comes in, we're going to make sure that it's properly titled in the name of the IRA. So Advanta IRA for benefit of Joe Miller IRA number 1234. It's the Advanta IRA trust tax ID, not his social security number. Again, we're basically putting the IRS on notice that this is an investment of the IRA account. But because we're not advising or doing any due diligence, we're going to send all the documents to Joe through DocuSign so that he can read and approve those documents. So he's basically reviewing and saying, yes, this is the investment that I want to make in this amount. Please send the money over for this investment. And then we actually do a phone call to make sure that Joe is ready for us to send that money out. Advanta signs the sub-documents on behalf of the IRA, because we're actually the legal signers of the IRA account. Money goes out, the investment is made, and now in the future, any dividends or maybe preferred return is going to go back to the IRA and deposited to the account, and Joe will be able to follow along with those deposits on his online portal, or he'll also get emails letting him know that money was received. Nicole, the syndicator, is going to send that money back to Advanta. And then after the investment is completed 3 years later in this case, the Joe's principal and total profit will go back to the IRA. So in this case, Joe's IRA receives back his original $100,000 plus an additional $20,000. And over the course of those 3 years plus the end result, he gained $44,000 in his retirement account. Now, remember I mentioned that sometimes a tax does apply, so we want to talk to you about that. And ultimately, we do not make a determination as to whether or not this will apply to your specific investment, but we want you to know that it does exist out there. It does not matter if you're investing through a Roth IRA or a traditional IRA. It's actually about the investment itself. And so because Joe is investing in a syndication and real estate is either being purchased or rehabbed using debt, that is going to be what causes the IRA to incur this tax. And so when looking at the project itself, Joe is going to talk to Nicole and ask these questions and say, okay, is there debt on real estate in this investment? And a lot of times, I would say most of the time, when you're talking about multifamily investments or maybe mobile home parks, you're going to have this apply. And so the general partners are going to ultimately be responsible for the debt, but the limited partners that are IRAs, they're going to incur this tax, and it's going to be on basically the income related to the debt. And so if the general partners leverage 50%, then 50% of all the income being returned to the IRA is going to be exposed to unrelated business income tax, or it's more commonly referred to as UBIT. And so all of that to say that it is not the principal amount that is being taxed, it's only the income, and it's only the percentage of the income related to the amount of debt. So if the general partners leverage 50%, then 50% of that income being returned will be exposed to tax. Now, the IRA will get to take deductions and depreciation to offset that tax. And so we kind of say tongue in cheek, the dreaded UBIT, because I think sometimes once you go through the calculations, it's not as bad as it seems. And so you're looking at something where you're definitely going to want to talk to an accountant. Maybe the syndicator that you're working with will have somebody on staff that can help you understand how the tax works, but ultimately it is to the IRA and not to you personally. And so you'll have the opportunity to get those deductions and depreciation, do the calculations, file an additional tax form called the 990T, but ultimately the IRA will pay that tax. And there are ways to mitigate that tax. Sometimes people use C Corps, or they call it a C blocker, or the other idea is that if you are self-employed, if you have self-employment income, solo 401ks or QRPs don't pay UBIT when exposed in this way.
Actually, yeah, before I go to the next slide, Larissa, yeah, just again, a point on the UBIT. I mean, yeah, as you mentioned, the dreaded UBIT tax. But again, for a lot of the syndications that I've seen, UBIT tax is not usually even due in the first year or two of the investment because of the accelerated depreciation, cost segregation, other deductions. You even get that automatic $1,000 deduction off the top anyway for the IRA. So it ends up not being as nearly as big a deal as some people make it out to seem. But it is something to certainly be aware of with those leveraged real estate investments. Now, as we go to our final case study, again, I encourage anyone listening, add your questions into the question box as we get close to a couple more slides here, this last case study. Really investing in private stock. This is something, again, we've seen over the years. I think Larissa was talking earlier and mentioned startup companies, local community banks. We've had people invest in local, breweries, people starting a new winery, things like that as well, where your IRA could invest in a stock. It's very similar in concept to investing in Apple stock or investing in Tesla stock, only the difference being these particular companies are private, and therefore, since they are issuing private stock, the brokerage firms, the banks typically will not hold those types of assets on their platforms. That's why an individual would need Advanta IRA to assist them from that perspective. So the background in this case study, Larry has $250,000 or so in an old 401k. He knows through some networking events that he does a guy named Mike who is starting a new private insurance company. Insurance company looking for private capital to get going, get it off the ground. Moving forward, their plan is to eventually, go public, at which point everybody can sell their private stock and hopefully realize a nice profit if the company has done well. So Larry, again, his responsibilities, so if this is your client that you're looking to raise capital from, you need to put them in touch with us. We'll help Larry get his account opened. We'll help him get the funds transferred. And as Larissa mentioned earlier, Larry says, I may have $250 in my IRA, but Mike, I really only want to start with this $100,000. He transfers only the $100,000 that he needs for this investment. And Larry's job or his responsibility will be to review the investment prospectus, the subscription documents, and then he decides to invest 100,000 shares at $1 per share. Again, our job at Advanta IRA will be to make sure that the offering documents, the subscription agreements, get completed properly in the name of the IRA. So a lot of times, our representatives here at Advanta will work with you if you're raising capital to make sure that those subscription documents are completed not only correctly for the IRA, but also completed as you would like to have them done as well on your end, what your compliance and what your attorneys say how they would be completed. So we get the account open, we get the property or get the stock purchased. We sign the subscription documents on behalf of the IRA, wire money out of Larry's account, and then we hold the stock certificate. So again, acting very much like you would expect a brokerage account to do in holding the stock. The difference, again, this stock being privately held. So Larry can hold this stock with his IRA indefinitely until the time comes he wants to redeem it. Over a course of a few years, the company is positioned to then basically go public. And when they go public 3 years after this initial acquisition, the shares start trading at $2 a share. Larry would work with us here at Advanta IRA to make sure that the stock can be then transferred basically from the private shares into a brokerage account, which would allow him to sell those shares on an open market. This is something we have done on several occasions with a number of different private issuers. So ultimately, Larry ends up transferring his shares back out of Advanta to a brokerage account and selling them on the open market, getting that money tax-free again back to his IRA account. So again, the common thread that these three examples have, again, is just you had an individual, individual in the case of Bill in the first example, who's just looking for one investor to make his investment work. In the second example, you had Nicole and Joe, where they were looking to raise capital from multiple sources, and the IRA was one of those. And similarly here in the last example, with Mike and his team looking to raise capital, and by issuing shares for their private insurance company. So again, all situations where the individual who needed the cash used the IRA structure, used that knowledge about self-directed IRAs to help them open up additional sources of capital going forward. Now at Advanta IRA, we cannot sell or endorse any particular investments. So we can't, advertise your investment to our clients. We can't suggest to any of our clients that they invest with you per se. But what we can do is help you really educate. Well, we certainly can educate you, but also educate your investors about how their IRAs, how their 401ks can be used for your particular investment. We can do that in a number of ways. We can do a private landing page or a marketing flyer, which we have examples on the next slide that I'll show you, where we can put your logo, your contact information, a little bit about you on a website or on a marketing flyer that you can then use in your emails. You can place a link on your website. You can share people one-on-one. Again, just making people aware that if they like your business model, if they like the investments that you're promoting, they can use their IRA to invest. And we create those private landing pages, those marketing flyers, free of charge for you. So we can do that for you. We also can host online webinars. So we've done a webinar today that covered a lot of really good, just basic information on how IRAs can be used with the types of accounts, the transfer process, what the process then looks like for making the investment in a case study. We can do private events like that. We can come on your platform. We could host a private event on our platform where you talk about your particular investment, and we can talk about the self-directed IRAs. Now, these webinars would be more focused on your database. We don't open these up to our database, but if you have a number of investors that you would like to expose to this concept, we can do that online event. Again, how we try to differentiate ourselves, we again committed to providing you with a great customer service, both for you and your referral business, and also for your individual clients. So your investors will all be placed with the same account manager, giving you a single point of contact, and also giving your clients a single point of contact for their investments and for their accounts. We can even create customized account opening forms alongside your investment paperwork, put together packets that helps expedite that process. If you have people who know what they're investing up front, we can create one kind of DocuSign packet that assists in them and makes it much easier for invest. The last thing we're going to talk about, and just Larissa will come back on and talk about, is our Pitch, Promote, and Prosper event, where we do allow people to pitch in an online forum. But before we talk about that, I just want to show you an example of these landing page and the marketing flyer. The landing page is what's on the left here, where we do, again, have a little bit of information about how to get started, the accounts that can be used. We include the company logo. There's a schedule consultation button for people to engage and actually put in their information, at which point, we will reach out to them and share that information with you as well if they're reaching out to us through your private landing page. The PDF flyers, again, on the right, describing a little bit about the process. Again, includes your marketing logo, your color schemes, et cetera, really to personalize it for you to use as you see fit. So this, again, something we can provide free of charge. You can reach out to Larissa or myself, and we'll be happy to get with our marketing team to get those done for you. So again, as we get close to wrap it up, I'm going to turn it back over to Larissa. Any questions you have, get them in your question box here as we wrap up the webinar, and let Larissa tell you a little bit more about our online networking event that we have.
Yeah, thank you, Scott. We've been putting on this event for well over a year at this point, and it's a great event. It's the last Friday of every month. And so especially now as we go into fall, we're going to see, people more attending. We usually tend to have a lighter group over the summer, and now we're getting into August, September. We're going to see more and more people joining, and it's just a great way for like-minded investors to get together. Everybody has the opportunity to talk about what they have or what they're looking for. You can share contact information here and really sort of do your 60-second commercial, so to speak. And so you're going to hear people with IRA money on there say, well, I just started with Advanta, I'm looking to place money, or I have money available at Advanta, I just had a note or something pay off and I want to get invested right away. And so there's a lot of opportunities on there, but there's also people raising capital. Just another good way to network with, again, like-minded investors. You're going to have a lot of people on there that are seasoned investors and syndicators. You're going to have people that on there that are new to self-directed IRAs and investing. And I think it's a really great group of people. And we have, what I would consider, I guess, our regulars. And then there's always new faces as well. And then the really great thing is that it is nationwide. And we've even had people join from China before and different parts of the world. So I would say it's a great opportunity, but also to learn about what the market looks like. So, when you join, you're really going to be sort of hearing where the market is going. People will ask questions of other capital raisers and, what they're seeing in their areas. So I think it's a great event. Again, last Friday of every month. We have on here every other Friday, but we kind of spread it out a little more over the summer, especially. Like I said, people tend to be traveling and not attending as often. So it's the last Friday of every month. You can go to advantaira.com/events, and it is Pitch, Promote, and Prosper. you do have to register to receive the link. So it's not the same link every month. So please mark your calendar to go ahead and make sure you register every month, and then you'll get the Zoom link to join. It's usually about an hour, hour and a half, depending on how many people are online. And something that I would really recommend of the group, so if you are new to the group and you join, try to set aside that hour to join us with your camera on, because I think having your camera on and then being engaged in the group is really going to help people to get to know you. And as somebody who does a lot of networking myself, that is definitely a recommendation I have for you. So if you're going to be new to the group, make sure that you have that hour to sit in, have your camera on, and be engaged so that people can get to know who you are, and know what you're looking for. If we have any other last minute questions, please make sure to type them into the chat box. This is being recorded, and so we will send out an email with the recording so you can review it and share it if you'd like. If you have more personal questions, my information as well as Scott's is up here, and so we would encourage you to reach out to us. We're happy to have a conversation with you about maybe an investment structure you're looking at, or again, maybe about the rules. As I mentioned, we have webinars on things like plans for the self-employed, but we also talk about things like Roth conversions and prohibited transactions. And so if you're just familiarizing yourself now with self-directed IRAs and you'd like to learn more of the intricacies, please, again, feel free to email us and we'll make sure to get you any of those webinars that you might be looking for.
Yeah, Larissa, I had to have a couple questions. Yeah, you just mentioned someone asked, is there a replay? Yes, if you joined us a little bit late. Yes, we will do, we like I said, record every webinar. As long as you were registered for the webinar, which you would have been if you're on now, we send the recording link out to everyone who participated live or who did miss it. So you will get an email probably later today or tomorrow with that link, or you can just go to our YouTube page as well. If you're looking for a copy of the slide deck with the link as well, just email us after the webinar. We'll be happy to reach out to you, get you that link as well. And so I think someone asked, are landing pages available for do-it-yourself solo 401ks? I think that's something we could discuss with you. So I would reach out to us. Again, if you're looking to raise capital, it may be more about your business raising capital as opposed to your 401k. But again, something we can discuss and go into a little bit more detail about that. So another question just popped in. So what is a common rate of return for my usage of my IRA and my funds? That can really be all over the board. Now, we don't have any numbers here at Advanta IRA because our clients are invested in such diverse investments, some of which return cash every month to the account, others which are don't return any profits until maybe the end of a 3-year investment period. So we don't have a common rate of return. It might be something you can Google and see maybe what you could expect or what IRAs kind of quote typically return. But again, that's very difficult to talk about with what we do because it is very investment specific. So again, if anyone else has any questions, type them in. I would just encourage, again, if you're someone who's looking to raise capital, you definitely need to reach out to us so we can let you know kind of the ins and outs of the IRAs and see how we can help you. If you're already raising capital, you're using other companies, whatever, please give us a call, let you know what we can do to assist you there as well, and maybe do things you're not getting great service from your other custodians you've worked with. Happy to talk with you and find your pain points and see if we can address those. Last questions, Larissa, I'll let you answer this one, but it says, other than the Friday meetings, do you have other suggestions on how to find solo K investors in our own local area, especially ones who are angel investors for equity or debt lending? I mean, and in general, how would you suggest people look for IRA investors or solo 401ks? I have my own thoughts, but I'll let you go first.
Okay. Yeah, great. Thank you. So I think that a lot of times when we talk about raising capital, people are really focused in on the fact that we're talking about IRAs and retirement accounts. But think about it this way. Many people have an old 401k after they've changed jobs or started a new career. You're going to have a lot of people who started an IRA and they're making contributions to it. And so instead of focusing on the fact that you're looking for retirement funds, I would just network with people. If you're looking for angel investors, surely there's a group in your local area for angel investors, networking, raising capital through businesses. things of that nature. Now, real estate, those tend to be more common as far as networking groups anywhere in the country. I'm sure if you went to Meetup and looked up real estate investment groups, you would have, so many different ones. But for something like, investors into startup companies, those exist as well. And instead of focusing and saying, okay, well, I'm looking for IRA investors, I would start networking. And when you start meeting investors, talking to them about whether or not they've heard of investing through an IRA, because chances are really good that they have a retirement account and didn't know that they could access that money. So I think, and that's really what Advanta does as well. I don't look for people looking to invest in their IRAs so I can tell them about self-direction. I look for people looking to invest, and then I teach them about self-directed IRAs. And I think when you come into it from that standpoint, almost everybody you meet could potentially be an investor, and just keeping your mind open to that, and making sure again that when you are going to investment groups, you're really, and what this is something that has worked for me, is just making sure that you're really engaged with the group, attend as often as possible, because as people get to know, like, and trust you, they're going to be more likely a good candidate for investing with you as well.
Yeah, Larissa, that's what I was going to basically say. Other than I'm looking for people with IRA funds, I would say I'm just looking for investors in general. And then, yeah, whether it's their own savings account or you're looking for whether you tell them about IRAs at that point. But I think that's a great piece of advice. I'll echo what you just said. Last question that came in, and we'll close up the webinar. Someone said, are franchises a good possibility for crowdfunding using my IRA? I don't know, and that's something that you have to decide as an individual. And I'll close kind of with this thought, and Larissa, if you have any thoughts you can add in. But when it comes to the investment, this is important to the context of raising capital. If you are sending investors to Advanta IRA to use their IRAs to invest with you, we are never going to tell the clients that your investment is a good idea, a bad idea. We're here to simply process the paperwork, make things happen as quickly and smoothly as possible. You've done the hard work of convincing someone the investment is right for them, or convincing them to place their monies with you. Our job is to process it through their IRA, keep it tax protected. But yeah, we don't do any evaluations as far as whether the investment is suitable for any particular investor. So that's my closing thoughts. Larissa, do you want to close us out with anything additional?
I just want everybody to keep in mind that we have webinars twice a week. And so if there are more things you'd like to learn about, including investment structures and things like what we're seeing in the market, please make sure to sign up for any of those webinars. Or if you don't see something in our upcoming calendar and we mentioned it today, again, please feel free to email us and we'll make sure to get that webinar out of the archive for you and send you the link.
Yep. Okay. Well, again, thanks everyone for listening. If you're listening live, we enjoyed you participating in our live event. Again, we'll send you a recording as well. If you are someone who's listened to our recorded event and you have some questions for Larissa or myself, please contact us. We'll be happy to get back to you. But again, thanks everyone for listening, and we'll see you soon.